Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Sales more than double at the world's most valuable company. Nvidia's bullish outlook reassuring investors that the AI trade has road to run. Bloomberg learns that Russia's President Putin is preparing to escalate attacks on Ukraine after deciding peace talks have hit a dead end. Plus, Qantas doubles down on its fleet renewal plans. We'll speak to the CEO of Australia's flag carrier later in the show. Well, a very good morning. Here's the picture in markets this Thursday. Nvidia's bullish sales outlook boosting stocks and futures. So we're looking at the South Korean Kospi up 1.5%. That boosting the broader Asian index, the MSCI Pacific Index, 0.3%. And you've got futures higher on both sides of the Atlantic as well. Already we saw Nvidia up nearly 5% in extended Wall Street trading. Nasdaq futures now up 0.7%. Now switching over to what's happening cross asset, and we have oil dropping for a fourth day, down 0.4% on Brent at $87 a barrel. Traders really weighing up progress on increasing energy flows through the Strait of Hormuz against Russia-Ukraine tensions that are curbing output. But if we look at the Treasury space, the monetary policy sensitive 2-year Treasury yield edging higher, up a basis point at 4.22% here. This after yesterday's inflation data kept bets alive that the Fed will hike rates by the end of the year. And this is a rarity at 6 a.m. We've thrown in wheat this morning because futures are at their highest in 3 years as attacks on vessels and infrastructure in the Black Sea added to the heat waves curb exports. Now, let's take a look at the risk events on the agenda for today. At 12:30 p.m. London time, we get the latest ECB minutes from the July meeting, of course. A unanimous hold, but notably, there was discussion of a hike, even if there wasn't a push for it. So really interesting to see just how hawkish the debate was. Then at 1:30 p.m. London time, it's US weekly jobless claims expected to have stayed low, giving the Fed little reason to worry about layoffs. And of course, today, it's what we've all been waiting for. Jackson Hole kicking off in Wyoming ahead of Chairman Walsh's speech tomorrow. So plenty ahead, plenty to review over the past 24 hours as well. Let's get started. We begin with Nvidia shares having risen in late trading after the US chip maker at the heart of the AI boom delivered second quarter earnings that crushed expectations. In a post-earnings call, CFO Colette Kress gave a bullish sales outlook, easing concerns that AI spending is poised to lose momentum.
The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028.
Well, let's get more now with Bloomberg Tech Europe and opening trade anchor Tom McKenzie. Tom, just put these earnings into context for us, because we get that they're good, but for anyone who didn't stay up late to listen to them and pass through them, just how strong were they? Are they strong enough to put the AI bubble fears to bed?
Well, I think that soundbite from the CFO of Nvidia really underscored the forward strength that they are seeing, and that's so consequential for the broader ecosystem and frankly for the global economy in many aspects. So what she was pointing to was 70% revenue growth in fiscal 2028. That's next year, the calendar year of next year. What was really interesting is that she could have outlined a stronger revenue picture if they weren't supply constrained. And so this is a company that is seeing constraints across the supply chain. That's what Jensen Huang said. And they could be delivering even more revenue if that wasn't an issue. So it's not a question about the demand. The demand is red hot. It's how they supply that. I'll bring it back to the quarterly earnings, the second quarter earnings. So revenue's more than doubling to more than $96 billion US, almost $100 billion US in a quarter, year on year. Profits coming in, earnings per share, $2.22, well above the estimates. And the expectations for the current quarter also beating the estimates as well. If you're looking for any flies in the ointment, it's that margin story. We talked about the reporting around pushing up prices up to 15% for some of their key customers. Margins, the CFO said, would be squeezed in the months ahead. So if you're looking for any weakness, maybe it's the margin story. Margins could get down to around 71, 72%. Now, 71% margin. Most companies would take that in a heartbeat. But we're going from 75% margin, gross margin, to 71, 72% in the months ahead, according to the CFO. So possibly that is something that those who are a little bit more negative on this stock will focus in on. But in terms of the demand story, it's incredibly high. This is a company that needs the rest of the ecosystem. It needs TSMC, it needs Samsung, it needs SK Hynix to spend on CapEx to be able to ensure that they get the memory chips and the production from the fabs to be able to meet that demand.
OK, so really incredible. And then we've got Nvidia stepping back into the China market. So how important is that as a share of revenue, or is it really more about the symbolism of getting back into China?
It is a bit more about getting that toehold back into China. And just taking a step back, this is a US administration, not just the Trump administration, the Biden administration, who have gone back and forth in terms of how far they restrict and to what extent they restrict chip sales into the Chinese market. The bottom line is they can now. They've signed off the Trump administration on a certain number of H200. Those are two generations behind the current chipset, the Blackwell chipset. The H200 can now be shipped into China in certain quantities. The other side of that is that China has to agree to those shipments, has to sign off, and their companies actually buying them. What we've learned is that there is now revenue coming through from China for Nvidia in the billions, about $7 billion US. So it's not insignificant, but it's still less than 1% of their revenues from the data center. So it's an area, of course, Jensen Huang's been lobbying hard in Washington to get access to that Chinese market. It's paid off to some extent. They really need the Chinese authorities to go full bore and sign off on their companies buying these chips in greater quantity. So far, we're not seeing that, but this is a company now that has that toehold back in the Chinese market.
Really appreciate the analysis, Tom, making it clear for us. Tom McKenzie there, and Tom will be back with the opening trade in just under an hour's time. Now, let's take a closer look at how those results are already playing out in the markets. We can go to Winnie Su in Hong Kong to take us through what's happening in the Asia session. Winnie, what are you watching?
Yeah, good morning, Lizzie. Well, we are seeing Asian stocks rising for a third day alongside U.S. futures after these bullish sales outlook from Nvidia, as well as the lower oil prices offsetting the firmer PCE numbers from the U.S. overnight. Now, we are seeing tech stocks really leading gains here, with the Kospi here up about 1.4%, followed by the stocks in Taiwanese market as well. However, a bit more of a weakness coming through for Japanese tech stocks. And we flip the board and take a closer look at what the nuance really is there, because as Tom just mentioned, a lot is about the supply constraints that we are seeing for Nvidia, and in the earnings it did highlight that surging memory costs is really pressuring, or is going to pressure, the profit margins of the company going forward, and that is why we are seeing the biggest beneficiaries in our region really being these memory chip makers, specifically in Samsung Electronics, SK Hynix, and even Chinese memory chip giant CXMT here up about 5%, while the names that are really more on the upstream of the AI supply chain, especially some of these Japanese chip makers, for example, Advantest here, are losing favor because of how the concerns around margins of Nvidia actually will provide more pressure for these companies. Now, flip the board, we also take a look cross-asset-wise, because a lot going on when it comes to the rate expectations. We have South Korea Central Bank raising rates back-to-back, a very rare move, as well as raising their growth forecast for this year and next year substantially. So we are seeing the Korean won strengthening against the US dollar. However, we did see those moves reversing a little bit for both the currency as well as the bonds after the central bank governor mentioned that this is going to be most likely a very gradual move. Similar moves that we saw for the Japanese yen weakening after the Bank of Japan's deputy governor mentioned that they are still opening doors for the potential hike of in September. However, he did not provide a clear hint on how this is likely going to turn out, and that is why we are seeing a bit of a weakness there. On the flip side, we continue to see the 3-year yield for Australia gaining for a third day, and that is coming as investors continue to bet that the Bank of Australia will have to continue to raise rates, especially after those hot CPI prints yesterday. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Su in Hong Kong. Now, let's get more on the wider market reaction and the macro perspective. We can bring in Bloomberg MLive strategist Ven Ram. So Ven, going back to Nvidia, we've talked about how the company is just so massive now that these earnings are in themselves a macro event. What's your main takeaway from that perspective? Good morning.
Morning, Lizzie. I think that the biggest takeaway from the Nvidia results is that, look, the AI narrative is still intact and it is still healthy. It is still doing well. As we broke down the numbers with Tom just a while ago, any way you slice and dice those are numbers that any company will take any day. So those are standout numbers. But yet, if you look at Nvidia's earnings profile and its price to earnings, it's one of the cheapest in the Magnificent Seven complex. And that shows that, look, investors, while they got a confirmation yesterday that, look, the AI story is still doing well, it's still got legs, it can continue further. They're not willing to bet a whole lot on Nvidia's own prospects, in terms of price earnings multiples. And that suggests something more important, which is that, this is going to be a rotational play. It's not going to be the smart investors are not going to stay with one company or one particular script. They are going to move from one to another, one sector to another, one script to another, and that's how this game is going to be played, and that is going to continue. So what it means for the Nasdaq 100 is that we are going to bob around these levels, but increasingly the focus of the markets is going to be rotational plays.
OK, up 0.6% on Nasdaq futures as things stand. Then let's just also look back at the PCE data yesterday, boosting bets the Fed's going to hike by year end. Does that put even more pressure on Chairman Walsh at Jackson Hole to explain how the Fed is going to deal with inflation?
Well, I do think that you're right. He's going to sound hawkish on Friday because, we've got those numbers. Those are not pretty numbers, 3.3% on core PCE and 3.7% on PCE. So, those are very ugly numbers. And if you look at the Fed funds rate in relation to those inflation numbers, the rate is hardly restrictive at the mid rate is at 3.63% and is hardly restrictive. So the Fed needs to do something, or at least show its hand here and saying, look, there is an adult in the room here and we will respond if there is a need to be. The last thing that the markets will want to hear is that, look, you know what, we have been missing the inflation target for 5 years now and we'll continue to miss it. We'll try to find a way sometime after the committees come back. And that kind of wishy-washy message won't just go down well with the markets. So I think that the risk going into Jackson Hole is that yields are going to be higher on the front end.
OK, well, we'll have full coverage from Wyoming, of course, on Bloomberg TV. But for now, Ben Ram from Bloomberg's MLive team, thank you very much. Well, we will also be covering, of course, that Kevin Walsh speech, so do tune in for that tomorrow. But still ahead, right here on Daybreak Europe, Russia said to be preparing an escalation of its war on Ukraine as negotiations stall. And we'll get you more of our exclusive reporting on that later in the show. But first, Qantas, Australia's largest airline group, has reported full-year results this morning. And we'll be speaking to the group's CEO, Vanessa Hudson, live from Sydney next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Now, Qantas has doubled down on its vast fleet renewal programme to resurrect profit growth, calling time on its ageing A380 Superjumbos. Australia's largest airline has reported its lowest annual profit in 4 years and scrapped a planned stock buyback. Let's get more now with Vanessa Hudson, Group CEO of Qantas, who joins us from the airline's headquarters at Mascot, adjacent to Sydney's Kingsford Smith Airport. Vanessa, really great to have you on Daybreak Europe this morning. Thank you so much for making time. Why is it now time to call the end on the Super Jumbo? How important are these fleet changes when it comes to your long-term strategy and investor returns as well?
Well, first and foremost, I'd like to start with the role that the A380 has played across the group for now over a decade has been such an essential part of our success And we know our customers love them. We know our people love them as well. But the A380 was always going to retire at a point in time. And so today we have announced the commencement of the retirement date of the A380, which is the middle of 2028. And that will then retire gradually over time as we get new aircraft. And the reason why we think it's important is that the new aircraft that are coming, Project Sunrise, which is the A350-1000 ULR, more A350-1000s, more 787s, because these are next generation aircraft. And we're really excited about them. They're going to enable us to transform our customer experience. They're going to enable us to transform our network, flying more people point to point, but actually they're going to have a higher premium seat density. And that then is just enabling us to retire and start retiring the A380 that was always going to retire. But today we've just confirmed the date of when it's going to start.
I feel a bit nostalgic here. Look, what additional direct routes will be opening up with the A350 then?
Well, the A350, so first of all, Project Sunrise, that is an aircraft that can fly from the east coast of Australia actually to any point on the globe. And so the capability of this aircraft is second to none. We've announced that the first flight will be from Sydney to London, and then we will progressively announce new routes. But the A350-1000, so the other variant that we'll be getting, and the 787s are also ultra-long flying. And so we'll see more points in the US, potentially Chicago, maybe, Seattle and other points, but also, in South Africa, more points in Europe. And so these aircraft will be transformative. And transformative not just for the Qantas Group, but I believe this is going to be a new way Australians are going to be able to explore the world, but also enabling the world to come to Australia. So we're so excited about them.
But when you've got fuel prices this high, Vanessa, does the economic case for non-stop Sydney-London or Sydney-New York flights still look as compelling as when Qantas first approved the programme?
Absolutely. And actually probably more so, if you really think about it. Having an aircraft that can actually fly further with a premium seat density and a customer who is actually prepared to pay enables us to have a great deal of confidence. If I think about what we're seeing currently, our ultra long haul routes, Perth to London, they're actually performing the best across every metric. They're performing the best in terms of yield and revenue uplift. They're performing the best in terms of seat count. They're performing the best in terms of customer satisfaction. And so if I think about, these new fleets, Project Sunrise, A350s coming, they are the aircraft that we need in all scenarios, in higher fuel scenarios, in different demand scenarios, because they give us the flexibility, they give us the agility to be able to, redeploy across our network in whatever circumstance we find ourselves in. So again, just coming back that these aircraft are going to be transformative for Qantas International. And today we kind of outlined, what that, performance is going to look like over time.
I do want to dive into the numbers, but just also on the Australian domestic market, you've got various players trying to get into that. One of them is Vietjet. Is that going to lead to a price and capacity war?
Look, what I would say is that we welcome competition. I've said it in the past. The Australian domestic aviation market is one of the most open aviation markets in the world, and we welcome competition, but in that regard, we're focused on running our own race, and what we're focused on is continuing to renew our fleet. Jetstar particularly, has got now 50% of its fleet is now on new aircraft that has got better range, capability, better customer outcomes. This is enabling us for Jetstar to continue to deliver low fares. We know that Jetstar customers, that is what they value most. Enabling affordable air travel in Australia is what we're really proud of that Jetstar does. 50% of Jetstar fares over the last 12 months were under $150. Actually, there are some scenarios that, a taxi or an Uber, may be more expensive than a Jetstar fare. So, This is important, delivering to customers, continuing the fleet renewal, but continuing to deliver great value for customers is what we're focused on across Jetstar, but also across Qantas domestic as well.
OK, just coming back to the numbers, you've reported a 14% drop in full-year underlying pre-tax profit. Part of the problem has been surging jet fuel prices as a result of the Middle East conflict. We've seen this across various airlines. But you said that the fuel bills jumped by 610 million Aussie dollars. Has the conflict in the Middle East fundamentally changed the way that you're thinking about fuel hedging?
Well, look, Qantas have actually got a strong record of fuel hedging, and it's been a policy that we have had in place for over a decade. And so that's not going to change. Fuel hedging only actually buys you a certain amount of time because our philosophy is that we will, in periods where fuel prices are high, we will adjust capacity, we'll adjust fares to enable us to recover what is such a significant cost line for us, but also for all airlines. And I think we've seen that a similar response right across the globe. And so we are going to continue to be just very disciplined with our fuel hedging approach. And we are going to make sure that we have got an ability to participate as well if and when, fuel normalises back to, what are those historical rates.
But what if fuel prices stay high? Who's going to ultimately bear the cost? Will it be shareholders through pressure on margins, or will it be passengers through permanently higher fares?
Well, I think if, fuel prices stay higher for longer, we are going to have to adjust fares. That has been something that we have been doing. That has been something that all airlines have been doing. Plus also manage capacity, particularly marginal capacity in periods of higher fuel price. That is something that, we will constantly scrutinise. And so, over time, I think that you'll see that all airlines are adapting to an environment if that were to happen, through fares, but also through cost reductions. Transformation and cost transformation has been a discipline that we've had at Qantas for many years, and increasingly technology is going to be a way in which we can drive transformation, drive productivity, drive efficiency. And we, see that that is a huge opportunity, but new aircraft as well. I mean, if you think about airfares may be one part, cost reduction might be another, but the new aircraft themselves are going to be transformative in terms of better fuel efficiency, lower consumption of fuel, but unlocking new destinations and new routes is a fundamental part of the transformative nature that the new aircraft are going to deliver to the group.
OK, Vanessa, really great to have you with us. Thank you so much this morning. That's Vanessa Hudson, Group CEO of Qantas. Well, coming up on Daybreak Europe, Shein prepares to go public at a valuation that marks a sharp fall from grace for the fast fashion giant. This is Bloomberg. This morning, Bloomberg understands that Shein is on track to raise about $1.7 billion in its Hong Kong IPO. That'd value the fast fashion retailer at just above $26 billion, compared with a roughly $100 billion price tag that it commanded 4 years ago. It follows abandoned attempts to go public in the US and UK due to regulatory scrutiny. And at least 162 people have been killed and hundreds more are missing after a violent flash flood on the China-Nepal border. The flood tore through a checkpoint and surrounding villages around 8:30 on Wednesday morning local time. Well, coming up, Russia's said to be preparing an escalation of its war on Ukraine as negotiations stall. We'll bring you more of our exclusive reporting next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Sales more than double at the world's most valuable company. Nvidia's bullish outlook reassuring investors that the AI trade has road to run. Bloomberg learns that Russia's President Putin is preparing to escalate attacks on Ukraine after deciding peace talks have reached a dead end. Plus, Qantas doubles down on its fleet renewal plans. The CEO of Australia's flag carrier tells us the move could bring a new range of direct flights. Well, a very good morning. If you're just joining us, 6:30 a.m.
Chicago, maybe Seattle and other points, but also in South Africa, more points in Europe, and so these aircraft will be transformative.
Vanessa Hudson there. Well, checking in on these markets this morning, and Nvidia's bullish sales outlook, as I say, boosting stocks and futures. So the South Korean Kospi, which is of course a bellwether for AI investments, is up more than 1%. That boosting the broader MSCI Asia Pacific Index 0.2%, and we're looking for gains on both sides of the Atlantic this morning. Wall Street futures pointing higher, particularly Nasdaq futures up 0.6%, as after we've already seen Nvidia up in extended trading on Wall Street, up nearly 5%. Now flip the board over to the cross-asset picture, and we've got oil dropping for a fourth day, so that also helping to boost sentiment. We're down 0.8% to $87 a barrel. Traders kind of weighing the progress on increasing energy flows through the Strait of Hormuz against the rising Russia-Ukraine tensions that are curbing output. We'll dive into both of those later on in the programme. But in your bond space, the two-year yield here at 4.21%. Yield actually higher across the Treasury curve, as we have seen that inflation data yesterday, as we were discussing with Ven, keeping bets alive that the Fed's going to hike rates by the end of the year. Just finally, wheat is one that we don't usually check in at this time on the morning, but I've thrown it in because futures are at their highest in 3 years, and this is after those attacks on vessels and infrastructure in the Black Sea, on top of the heat waves, have curbed exports. Now, let's take a look at the front pages this morning. Plenty of focus on Nvidia's earnings. The Financial Times focusing on the chip giant's efforts to rebut criticism of deals that have been described by some as circular financing. And meanwhile, the Wall Street Journal says that the results are a pleasant surprise for investors who thought that the AI trade might be levelling off. But in Germany, if we look at Handelsblatt, it leads on reports that CIA Director John Ratcliffe warned Russia against an attack on NATO in a surprise visit to Moscow. We'll get into that as well later in the show. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to D8YB Go. Now, let's turn back to earnings, because out of Paris we have numbers from the drinks maker Pernod Ricard, and it has pared back its growth outlook, citing weakness in the United States. So the hothead is that it sees 2027 to 2029 net sales growth at the low end of the range. So this is its medium-term forecast, and it's really contending with a prolonged slump in demand. So this is, of course, the company that makes Absolute Vodka, it makes Jameson whiskey, whatever's your tipple, and it's cited persistent weakness in the US before this revised outlook. So those shares down about 8% year to date. We'll take a look at how they react at the market open. Now, let us turn back to the geopolitics, because Bloomberg understands that Russia is preparing to escalate attacks on Ukraine after concluding that peace talks have reached a dead end. Let's get more now with Anthony Halpin, who leads our Russia economy, government and government coverage. Tony, just tell us what more we know about these escalation plans. It's an amazing scoop, this.
Yes, I mean, essentially Vladimir Putin's government has come to the conclusion, the Kremlin has come to the conclusion that there's really no mileage for them at the moment in peace talks. All the frameworks in which they held negotiations have more or less stalled or collapsed. And they've gone back to war, essentially. They're intending to escalate attacks on Kyiv, particularly on critical infrastructure on the leading up to winter, so things like energy and essential services, and they're looking to ramp up the pressure on Ukraine because they think that that's the best way that they're going to achieve their war aims, to force Ukraine into some kind of submission. It has to be said that that's a view that they've taken for 4.5 years, and Ukraine has disproved that consistently. But the Russian view, I think, is that they see that Ukraine is more exposed than it was because it has a lack of air defense missiles, and now's an opportunity for them particularly at the moment, to launch missile attacks, ramp up the pressure, attack Ukraine's infrastructure and economy, and see if that produces better results than negotiations that they think are now going nowhere.
So I mentioned the Wall Street Journal reporting that the CIA chief's surprise Moscow trip was to deliver this warning to Russia not to attack NATO countries. If we do get an escalation, Tony, how prepared is Europe?
Yes, that's a very good question, because there have been a rising number of what's called hybrid incidents across member states in the European Union and NATO, places like the Baltics, Poland, but also places like Germany. And European nations have been very cautious in their wording. They've basically attributed this to sort of foreign interference, a foreign power, without pointing the finger directly at Russia. And partly, I think that's because they know that that would then require them to up the ante and make some kind of response. The fact that the CIA director traveled all the way to Moscow, it's quite rare for the CIA to consider something so important that they send the director in person to deliver that message, is an indication, I think, of the rising seriousness and the tensions along the border areas between Russia and NATO. And if that report is correct and that message was delivered, then it's another signal really that NATO states are trying to get more muscular in their response in order to deter Russia from continuing this kind of campaign.
OK, Anthony Halpin there, thank you so much for bringing us that reporting. Well, while the Russia-Ukraine tensions, you would think, are putting some upward pressure on oil prices, overall prices are easing once again this morning as investors weigh as well progress on diplomatic efforts to resume shipping through the Strait of Hormuz. Now, Iran's military says that it's reached a revenue-sharing agreement with Oman on the waterway. Does everyone agree? Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar joins us now for more. Abir, how much of an impact could this agreement have on the ground? Because a lot of viewers have been asking, have oil prices been relatively capped because traders are encouraged by the Oman-Iran talks, or is it because the US naval escorts are working and ships are getting through the strait regardless?
Good morning, Lizzie. That's a good question. And I guess it's a mixture of multiple things that are leading Brent crude prices on a 4-day downward move. So we started with that economic isolation plan, but Scott Bessent really failed to address what countries are going to be impacted by it, by that plan that the U.S. had laid out. And so the oil traders reacted to that. And then, of course, the interim agreement between Oman and Iran, we heard about it earlier this week. More details had emerged. And then some success when it comes to the U.S. naval, when it comes to the U.S. Essentially being able to escort ships down the Strait of Hormuz. So it's a mixture of multiple things, but it's definitely that interim agreement that we had reported on at the start of the week or earlier in the week, the joint statement between Iran and Oman that suggested that they finally found a mechanism, although it is interim in nature, but it paves the way for 30 to 60 days of more ships being able to cross the Strait of Hormuz. And then, of course, the ability for those two countries to find a more permanent solution. And that's really why you're seeing the easing overall in Brent crude prices, about 7% lower for the week. So in a nutshell, there is no one thing that is having an impact on the downward move in energy prices. It's multiple factors, but then it's just important to bear in mind that those negotiations that have taken place are merely between Oman and Iran. You've rightfully mentioned on the show and multiple times over the past couple of months that the U.S. has not taken part in those wider negotiations, and that remains important. So while the market is now favoring the conclusion of a ceasefire and no return to a full escalation in military action, it is for now still a ceasefire. We are not over with this war. It's not a resolution. And so more remains to be seen over the next few weeks, Lizzie.
Well, yeah, even if the US isn't part of that agreement, what we have been hearing is President Trump's claim that the US has completely removed mines from the Strait of Hormuz. Now, yes, that's being disputed. What more do we know?
We know that that might not be entirely true. Now, President Trump and the United States have made those claims multiple times before, but we have from multiple different fronts saying that that's not entirely true. One is the IRGC saying that the only parties that are involved or know about where those explosives are in the waterway are officials in Iran. We, of course, had the head of the IMO last week saying that no ships are making their way in the Strait of Hormuz in a natural way, and that the explosives are still pretty much there. You've got European officials voicing their concern that those explosives are there. And then, of course, you have Bloomberg Economics that says that it's highly unlikely that all the mines in the straits have been, or in the strait rather, have been cleared. Even if the mine threat was reduced, Iran could still escalate, because let's just remember that for Iran, it is still a possibility for them to pose threats in the Strait of Hormuz, to pose the threat of attacking vessels via drones or missiles in the Strait of Hormuz. Just a couple of days ago, the UK Navy had reported on August 25th that a vessel was hit with an unidentified projectile. Of course, we don't know what that was for the time being, but that risk is still very much in the Strait of Hormuz. But when it comes to the demining of the strait, that is a clause that was discussed between Oman and Iran that will be taking place over the next 30 to 60 days, again, according to that draft that was laid out. And then the back and forth between Iran and President Trump when it comes even to the presence of those explosive devices in the waterway still exists. But overall, the picture is slightly more positive with that breakthrough between Iran and Oman, of course.
As we're seeing in the oil price. Abir, thank you so much. That's Bloomberg's Abir Abu Omar out of Dubai. Well, coming up on Daybreak Europe, how Africa's richest family is preparing to carry forward their father's industrial legacy and how it could reshape the investment case for the entire region. We'll have a sneak peek of our exclusive interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:45 a.m. here in London. Now, the proposed listing of the Dangote refinery could be a defining moment for African capital markets and a major test for one of the continent's most influential business families. In the upcoming episode of Next Africa, Bloomberg speaks to the Dangote sisters as they prepare to carry forward their father's industrial legacy. Let's speak now to Bloomberg's chief Africa correspondent, Jennifer Zabasaja, who brought us this interview. Jen, what else stood out to you from this conversation?
Well, Lizzie, listen, the reason why we wanted to talk to the daughters is because a succession plan and a stable succession plan is very important to investors. And especially if you take a look at elsewhere in the world, from Asia to the Middle East to even Africa, seeing how a figure like Aliko Dangote, Africa's richest person, is forming the succession plan for one of the biggest conglomerate, or the biggest conglomerate across our continent, is very important. And so we really wanted to get to what it was that these daughters are stepping into, and what stands out to them, especially as they begin to shift into these executive roles. And so it was very enlightening to see that they still very much are, supportive of what their father started, and still have very much to prove. Take a listen to what they told us.
By next year, first quarter of next year, you start to see the presence of a family office while looking at the 2030 vision, looking at how we support women, how we support social impact investment, not just the business-wise. We will invest, we will collaborate, we will grow our refineries from, we have in Nigeria, we're going into Kenya, we're doubling our capacity from 650, actually my dad will correct me, 750 barrels per day to double that. So we are well on our way to do that.
Would you look to partner with others in terms of co-investing in any projects or collaborating?
We don't mind co-investing, but we are very much open to partnering when it comes to investment. But when it comes to our legacy, it's going to be our legacy.
Is that because it stays within the family?
It stays within the family, yes. It stays within the family, and it stays within our core values. What really matters to us is our core values. We know what they are. We are also Muslims. We're also Sharia compliant, so it's a bit different, different feel. And we want our businesses in 5 years to still look like we're focusing on that industrialization, but having it to survive the next 8-10 generations. In Africa, from the 3rd generation, you're like, what happened, right? So we don't want to know we don't want to be part of what happened. We know what happened and we're going to change it.
And Lizzie, that was Halima there, the middle daughter speaking. She obviously oversees the family office that's based in Dubai. But listen, she speaks to really what I was alluding to, which is that they're very much focused on still their core values as a family. Even when I've interviewed Aliko Dangote, he still very much refers to himself as an entrepreneur. So it still is a family business, despite being a business that we are very much anticipating to be one of the biggest or the biggest African IPO that's to come. But still quite a bit of family values that they are moving forward within the business and within the company, and a lot for investors to pay attention to, especially as these girls step into the executive roles with their father still at the helm strategically.
Yeah, it's really a privilege to get the family perspective. Jen, how are investors weighing the IPO's risks?
Well, Lizzie, the IPO, as I was just mentioning there, is expected to be Africa's biggest IPO. And really what we've been focusing on is how Aliko Dangote plans to make this a seminal moment for African capital markets. Of course, we talk quite a bit about how a number of the markets across the continent are still not very liquid. And so what potentially does this offer up to investors, both institutional and retail investors? And he has said that he is committed to doing as such, even though the primary listing is going to be in Nigeria. If we take a look at some of the risks, I've recently spoken to an investor at Bank of America who has said investing into a refinery in and of itself is a bit of a risk. But she said it's a risk that Dangote and the Dangote group can take, just given some of the successes and really what underpins the success of their businesses across cement, sugar, fertilizer, as well as refinery. And so we are expecting, hopefully in the next few weeks or in the 3rd quarter, as I was told, this IPO to come. And really the real question will be, what does the valuation look like? How does that then transform Nigeria's capital markets and potentially open up some more liquidity opportunities for investors across the continent?
Okay, Jen, thanks so much for bringing us that interview. Looking forward to watching it in full on Next Africa. That's Bloomberg's Chief Africa correspondent, Jennifer Sabasaja. And you can get the full episode premiering tonight on Bloomberg TV. You can also stream it on Bloomberg.com and YouTube, or catch replays over the weekend. Now, to some other top corporate stories this morning. Bloomberg has learned that Anthropic has agreed to spend $45 billion renting AI computing power from Nscale's flagship data center in West Virginia. We're told the 6-year deal will use Nvidia's Vera Rubin chips and represents about 460 megawatts of power, enough electricity for around 350,000 average US homes. Meanwhile, Bloomberg has learned that the US government's investigating Singapore-based Apex Logistics over its suspected role in smuggling Nvidia AI chips to China. We're told authorities are examining whether Apex transported Supermicro AI systems in violation of US export restrictions. Apex, which is a subsidiary of Switzerland's Kuehne + Nagel, says that it is cooperating fully with the investigation. Plenty more coming up on the programme. Do stay with us for some terminal charts to frame your day ahead. This is Bloomberg.
It's a very, very good result for North Asia, and as you've seen the reaction in Korea, very, very good news for the memory makers as well.
Keep in mind that this is growth that is constrained by supply. Nvidia was very explicit in saying that if they would be able to get more supply, they see a path towards doubling the revenues next year.
Right now, you don't really worry about the semiconductor results because the supply chain is very constrained and demand outstrips supply, right? So you can see that for the next few quarters. Everybody's scrambling to increase the capacity.
We pretty, understand the latent demand for AI. It's really down to whether these LLM models that Anthropic and the other US companies are initiating are actually going to be as profitable as they originally had planned.
Some of our guests from across Bloomberg TV reacting to Nvidia's blockbuster results. And indeed, that reaction is what's dominating the futures and equities picture this morning. Green around the world. And the company saying that this AI-fueled revenue surge is going to extend into 2028. And it would do so even faster if it weren't for the supply constraints. That's the point that Tom McKenzie was making at the top of the show. But flip the board over. And in terms of the market reaction, think about how we went into these earnings. Because Nvidia arguably was cheap heading into them. But its one-year volatility was also extremely cheap. And that $100 billion number should serve as a reminder to those betting on the US market volatility of the immense earnings cushion that Nvidia is sitting on. That should serve to blunt the volatility across the chip space. And the point that Ven Ram was making is that, of course, Nvidia is kind of becoming the central bank of AI at this point. So there's also a macro side to this. But finally, let me leave you with one more terminal chart to shape your day ahead, perhaps, because the street is starting to realise that it is very expensive to fight the US Treasury in the short term. The yield curve bending to Scott Bessent's will somewhat, and Morgan Stanley now advising clients not to take contrarian positions against that trend as we head into Jackson Hole. Speaking of which, let's take a look at the risk events on the docket for today. At 12:30 p.m. London time, we'll get the latest ECB minutes. We'll also have US jobless claims at the same time. And, of course, Jackson Hole is kicking off in Wyoming today, so we'll have full coverage for you right here on Bloomberg TV. Well, coming up this morning, we'll be speaking to Germany's Digital and State Modernisation Minister about digital sovereignty and the AI race. That exclusive interview coming at 8:30 a.m. London time on the opening trade, which is up next with Anna Edwards and Tom McKenzie. They'll take you all the way to the European market open, so stay with us. Good morning from London. This is Bloomberg.